investing in preferred stocks. Within topics, we talk about the different features of preferred stocks as much as the exposure to risk and sources of value. We will discuss the different rights and claims of preferred stockholders, and you understand afterwards the measure of investment worth, and you know several investment strategies which investors are using for preferred stocks. Now, what is a preferred stock? A preferred stock is a combination of some features of the common stocks and some features of a debt. Having both debt and equity characteristics, it is called very often a hybrid security. Now let's go deeper into preferred stocks, looking at the issued characteristics and the investment strategies. Let's talk first about the disadvantages and the advantages. The advantages are definitely the current income. Preferred stocks are paying a dividend, which is in general higher than the common stock dividend. And they're paying this dividend. Now let's talk about first the advantages and disadvantages of preferred stocks. One of the most advantages definitely are the dividends. Preferred stockholders getting a higher dividends in general than the common stockholders. And they're getting the dividends before the common stockholders getting them. What the claims of the dividends and the claims in the asset concerns, the preferred stockholders are prioritized against the common stockholders, though they're getting the money before common stockholders as well. Next thing is certainly there is a low cost for buying preferred stocks because they're traded over the stock market, and the fees for buying or selling preferred stocks are relatively low. With the advantages are coming disadvantages. First of all, for the company are not entitled to deduct the preferred dividends from taxes, though they have to earn after tax. Then the dividends are certainly susceptible to inflation, meaning if inflation goes up and the interest rate goes up, the prices or the value for the preferred stocks are going down. Then certainly the preferred stockholder doesn't have any legal backing, meaning if the company is failing to pay the dividends, there are not necessarily a claim about that. Having a high dividend means that the price movement of a preferred stock is relatively low, so big capital gain potential is not visible and not guaranteed in the preferred stocks. And then being preferred very often on the dividend side means you have no voting rights. So most of the preferred stocks or preferred stockholders having no voting right on their stocks. Now let's have a look on samples of couple preferred stocks from companies. We have companies in form of Bank of America, for example, JP Morgan Chase, which are banks, as much as United Cellular, being, for example, a technology company. They paying dividends in form of $1.50, $1.66, up to $4.50, and the market prices in the year 2018 had been in the range most of the time of $25. Sometimes we have 56 or also here 27. But as you can see, most of them, the price range of preferred stocks are in the area of $25. If we're dividing the annual dividends by the market price, we're getting the dividend yield. Also here you see a very range of the dividend yields from 4 to 8%, which reflects also the risk associated with an investment in the preferred stock of a different company. Now, what is the source of value for a preferred stock? The value is a function of the dividend yield provided. When we look on the formula below there, we have the annual dividend which is paid divided by the prevailing market yield. So let's assume we have an annual dividend income of $2 per preferred stock and the prevailing market yield is 10%. So we have $2 divided by 10%. The price of the preferred stock will be $20. In general, the prices are moving inversely to the interest rate, which we learned also on the bond market, meaning if the prices are going down, the dividend yield goes up. If the price is going up, the dividend yield goes down. Besides the dividend yield, there are other things which are affecting certainly the preferreds. One thing is the investment quality of the company. If the company has a bad quality, being close to bankruptcy, certainly the risk is much higher. At the end, the yield to maturity will be higher as well. Then certainly the issue characteristics are affecting it. Call features, sinking fund features, which we talk about now. There are many issue characteristics coming with preferred stocks. Talking about first with the conversion feature, which is very interesting. If I purchase a preferred stock, I am having the disadvantage that I don't have a voting rate and my capital gain potential is limited due to the high dividends. With the conversion features, I have then the possibility to convert preferred stocks into common stocks. The conversion rate is given, so I know exactly how many common stocks I get for how many preferred stocks. That means I can participate then on the capital gain on a company, but I'm losing the high dividends from the preferred stocks. Then we have the rights from the preferred stockholders, what the dividends concerns. In general, preferred stockholders getting a quarterly dividend, and there are priority to the dividends from the common stockholders. So if the company's earnings are just enough for the preferred stockholders dividends, then they getting these dividends. The common stockholders have to wait or they don't get any dividends. The adjustable rate or floating rate preferred stocks mean that the dividends are adjusted periodically to the benchmark. The benchmark most of the time is a treasury issue. Keep in mind, treasury are government bonds. And if the yield of the government bonds are going up, the dividends are going up. If the yields of a treasury is going down, the dividends are going down. Then we have the characteristic of a preference stocks. The preference stocks means that the holders of these preferred stocks are having a higher priority in case of dividend payment against any other preferred stockholders and certainly the common stockholders. Also in the case of liquidations, the preference preferred stockholders having a higher priority than any other preferred stockholders. The cumulative provisions means that any preferred stockholders having a preferred stock where a cumulative provision is included, that they get the unpaid dividends paid later when the company is able to pay dividends again. And they're getting these unpaid dividends before the common stockholders getting this. It happens in some cases that the company is not able to pay the dividends because they're not generating profits. If they're generating losses over 2-3 years, they may skip, for the reason of liquidity, the dividend payments. If I have cumulative provisions, I get them paid later on. In case of an in arrears provisions, any kind of unpaid dividends, which is remaining outstanding, is an unfulfilled obligation of the company and might have to be paid back later on. The opposite of a cumulative provision certainly is a non-cumulative provisions. Here the company is released or excused for paying all the past unpaid dividends. So that's not an unfulfilled obligation at the moment. When we talk about a deferred call basis, that means that the issue of preferred stocks can only be called, meaning purchased back from the company after a certain years of the time the preferred stocks are out of the market. We already know what a sinking fund provision is from the bond investments. Here, a specific part of the outstanding preferred stocks will be paid back, paid off, amortized, meaning the numbers of outstanding shares will be reduced. Now let's get into the valuation of preferred stocks and see how we put this value together. To value preferred stocks, we have basically two major formulas. One is certainly the dividend yield, which we already talked about in the beginning. Dividend yield is very easy to calculate: annual dividend divided by the current market price of the preferred stock. This gives the investor the idea how much the yield is, and he can compare the yield with the other yields of companies, and he see where the risk is. Together with this and the fixed charge coverage, which measures basically the riskiness of paying the dividends, with the formula earnings before interest and taxes divided by the payments of interest expenses and preferred dividends, tax adjusted. Here, the better the coverage is, the lower the risk. The lower the coverage is, the higher the risk. So if I have a high risk and I have a low dividend yield, it would be not a good investment. If I have a low dividend yield and a high coverage of the payments, then it might be a good investment. Now let's talk about the investment strategies. In general, we differentiate three strategies. One is looking for the yield, the other one is trading on the interest rates, and the third one would be the turnaround speculations. Now let's start first with looking for yields. Preferred stocks are preferred what the dividends concerns. They get paid before common stockholders get paid. So an investment strategy certainly would be good for investors looking long-term investments, looking for high current income, and looking for some kind of safetiness and stability. To increase the return on the preferred stocks, you can invest also in monthly income preferred stocks. Here, dividends will be not paid on quarterly basis rather than on monthly basis. So it guarantees a monthly income. The second strategy would be the trading on interest rate swings. We know that the interest rates on the market going up and going down, though doing the prices of the preferred stocks. Though prices of preferred stocks are not that much related to the profitability of a company rather than on the interest rate swings. The interest rates are going up, the prices of the preferred stocks are going down. But if the interest rates are going down, then the prices of the preferred stocks are going up. And this gives the investors an attractive capital gain together with the dividends which they get from the preferred stock. The last strategy would be the speculating in turnarounds. Due to the fact that preferred stocks are from companies, companies can be in financial distress. If they are in financial distress, certainly the company's prices on preferred stocks as much as common stocks are going down. If I want to speculate, I speculate on a turnaround, so I believe that management is able to turn the company back to profitability. That certainly gives me the potential of capital gain within the preferred stocks, together with all the maybe unpaid dividends over the past. When we're looking on here, we have on the blue line a typical average price behavior of a good investment grade preferred stocks, which is not moving that much. And when we look on the red line, we see exactly on this point here the possibility of a turnaround. So if I purchase the preferred stock slightly before and I'm believing in the turnaround, I may have also price appreciation potential of this preferred stock. Now we learned to describe some basic features of preferred stocks, including the sources of value and the risk. We talked about the special issues characteristics, what the rights and the claims of preferred stockholder concerns, as much as we understanding some investment strategies of investors for preferred stocks. Thank you for listening. Goodbye.